Yeah, so that means you're okay, and we can start. So we can start. So we had, in this case, started looking at public sector accounting. We had started looking at public sector accounting. So I want us to look at the computations there. We had looked at the advantages or benefits of having to adapt 𝗟𝗄s, the benefits of adapting 𝗟𝗄s. So you can write now in this case the next heading, challenges in promoting adoption of 𝗟𝗄s. So challenges in promoting adoption, of 𝗟𝗄s, challenges in promotion of adapting of 𝗟𝗄s. So what are some of the challenges that in this case will arise whenever, in this case, public sector entities will try to adapt the international public sector accounting standards? What are they likely to face as a challenge? What are they likely to face as a challenge? What are they likely in this case to face as a challenge if they were to adapt, in this case, what international public sector accounting standards? So you can be able to write challenges. So the challenges. So challenge number one that means that they are likely to face. Challenge number one, the sovereignty of different countries. Sovereignty the sovereignty of different countries, the sovereignty or independence of different countries can pose a challenge. You know, countries want to be so much independent. So they don't want, in this case, to like adapt to what others are having to do. So you can be able to say Kenya is a sovereign state that in this case has its own laws or regulations that end up having to govern it. So they are not supposed, in this case, to be influenced in any way by, for example, foreign policies or maybe foreign intervention. So each government operates independently. What do you mean by this? Each government operates independently. And therefore, this one can pose a challenge. So each government would like to operate the way they want. So they might not, in this case, buy the idea of adapting the international public sector, prepare their accounts. So each government operates independently. Then number two reason that could be a challenge in promoting adoption of international public sector accounting standards. National accounting standards. So different countries have different reporting requirements. Different countries have their own reporting requirements. Different countries have their own reporting requirements. So how we are supposed to, for example, prepare the books of accounts for public sector entities in Kenya might not be similar as to, in this case, maybe Uganda or Tanzania will end up having to prepare their public sector accounts, because they have their own needs, they have their own requirements. Is what in this case they want to conform to. Then number three, another challenge. Countries have different laws that apply to different government entities. So countries have different laws. Countries have different laws that apply to different. Countries have different laws that apply to different government entities, And therefore, this can actually also be what a challenge. So each and every country, they just have their own laws that in this case they want to conform to. Then number four, challenges in terms of resources and human capital. For example, some of the governments lack the requisite human resource of personnel who are skilled in how they can be able to prepare the public sector accounts. So in this case, you can have, in this case, what challenges in resources, challenges in lack of resources, challenges in lack of resources, challenges in lack of resources and the personnel, to implement adoption of international public sector accounting standards, So challenges in lack of resources and the personnel to implement the adoption of 𝗔𝘗𝘃, Then number 5, another challenge could be, lack of political goodwill, to support adoption, of 𝗔𝘗𝘃𝗍, lack of political goodwill to support adoption of 𝗔𝘗𝘃. So those who are in public agencies or those who are in public offices, they might not in this case wish to have these 𝗔𝘗𝘃s having to be implemented, because if they're implemented, they'll be proper reporting. They likely in this case they to be proper reporting. There'll be proper reporting. And then in this case, the corruption will likely not actually end up having to happen. But now you know. So they just want in this case not to adapt to them. They don't want to do the things the right way by following the right procedures for them to be involved in corruption. So lack of political goodwill to support adoption of 𝗔𝘗𝘃, lack of political goodwill to support adoption of 𝗔𝘗𝘃, Then also number 6, so in this case the last one, staff resistance, personnel or staff resistance, The employees of the government might not actually be wishing for these 𝗔𝘗𝘃s to be adopted. So they'll resist. So they naturally, people end up having to resist changes. They don't want, in this case, changes to occur. Whenever in this case they hear about a change, so they are so much stressed. Like in this case, us having to move this class from, in this case, 6 p.m. to 5 a.m. in the morning. So many people in this case will end up having to be so much stressed. So the same case. So when people hear new things are having to come, the personnel or the employees of the government, they will not actually wish for such. They'll actually resist by all means. They will resist by all means. So personnel or staff resistance, and also language barrier. Personnel or staff resistance, and also in this case there could be issues about language barrier. So how they can actually be explained to these 𝗔𝘗𝘃s can also in this case be challenging, unless they are maybe in this case converted, or in this case end up having to be interpreted into so many languages. It can also in this case be challenging. It can be challenging. It can end up having to be so much in this case challenging. It can end up having to be so much in this case challenging. It can end. So now I want us in this case, we look at the final accounts that will likely be prepared by public sector agencies or public sector entities. The final accounts that will be prepared by public sector agencies or public sector entities. So final accounts for public sector entities or agencies. So final accounts for public sector entities, you write this final accounts for public sector entities. So final accounts for public sector entities, public sector entities, i.e., right, i.e., the statement of financial performance, statement of financial performance, the statement of financial performance, statement of financial performance, and the statement of financial performance, and the statement of financial position, and the statement of financial position, and the statement of financial position. So the final accounts of a public sector entity, i.e., the statement of financial performance, and the statement answer is like an income statement. Is like what? An income statement is like an income statement. And therefore, in this case, I want you now to open this question, September 2015. September 2015, question number 5B. Question number 5B. Open this question, September 2015, question number 5B. So once you've been able to open it, you let me know. September 2015, question number 5B. September 2015, question number 5B. September 2015, question number 5B. So as you are saying, you have it. It says, the following information was extracted from the books of the Ministry of Tourism for the fiscal year 30th of June 2015. You are given an accumulated fund, cash and cash equivalents, receivables, inventory of consumables, transfers from the exchequer, fees, fines and licenses, liability for long-term benefits, long-term borrowing, finance costs, supplies and consumables used in the ministry, wages and salaries of the staffs at the ministry, other expenses at the ministry, transfer from other ministries that were received in this ministry, transfers to other ministries, the money they transfer to other ministries, computer equipment that they have, vehicles that they have, land and buildings that they have as a ministry, revenue from the exchange of what? From exchange transactions. They got some revenue through exchange transactions because it's what the Ministry of Tourism. Other revenues that they have. Then they have also payables. So there are those people they have actually been able to maybe get some services from, and therefore they are supposed to pay. Then they also have in this case what reserves. So then in this case you are called upon to prepare a statement of financial performance for the year ended 30th of June 2015 and a statement of financial position as at 30th of June 2015. So through what you'll be able to prepare here, then you'll be able to see the format. From what you're going to prepare from this question, you'll be able to see the format of the statement of what? Financial performance. And also you're going to see the format of a statement of financial position of our ministry. The statement of financial position of what? Of our ministry or a government agency. So the first one in this case that you can be able to prepare is that first one you've actually been asked to prepare statement of financial performance for the year ended 30th of June 2015. So you can be able to say Ministry of Tourism. So you can be able to say Ministry of Tourism. Ministry of Tourism. Ministry of Tourism. Statement. This is Roman 1. Ministry of Tourism statement of financial performance. Statement of financial performance. For the year ended. It is for the year ended what? You need to put the year ended 30th of June 2015. 2015. And our shillings, we are having to report them in thousands. Our shillings, we are having to report them in thousands. Our shillings, we are having to report them in thousands. Our shillings, we are having to report them in thousands like that. We are having to report them in thousands like that. So this one, you start in this case with the receipts that were received in this ministry, money that was coming in. You start with the receipts, what was being received in the ministry. So part of the receipts that in this case can actually be received there, So there were some transfers. There were some in this case what? So because you have accumulated fund, this is like the capital of the ministry. So here we don't call it capital, we call it what? An accumulated fund. We call it an accumulated what? Fund. So here we don't call it capital, we call it accumulated what? Fund. Is what they have actually been able to accumulate. So we don't call it capital, we call it accumulated fund. Then cash and cash equivalents, that is not a receipt, it's not like an income item. It's not like an income item. Remember here, if you are preparing the one for the private sector, we would have said in this case here what? Incomes. But here we are having to say what? A receipt. So we need to get, like in this case, equivalent of incomes in a private sector what? Entity. Inventory of consumables transfers from what? From the exchequer. That's what that was what? An inflow. So transfer from the exchequer is money coming in. This is transfer from the Ministry of Finance. Transfer from exchequer is what they have actually been allocated in the budget. Transfer from the exchequer is what they have actually been allocated in the budget by 𝗵𝗵𝗃. Is what 𝗵𝗵𝗃 has given them. It is what 𝗵𝗵𝗃 has given them over a particular financial year. So 1875 is what 𝗵𝗵𝗃 has been able to give them over a particular year. So 1875 is part of the receipts they received. Then we have in this case what? Fees, fines, and of course what? Licenses. You know, this is what the Ministry of Tourism. So sometimes in this case they end up having to fine those who are not having to conform to certain what? Rules and the regulations of the ministry. Maybe in this case it could be in what? In their game parks, in the game parks, in the reserves, game reserves. There are those maybe in this case who threw litter, those who threw bottles there, they were fined. They were fined. It could be in this case, it was a hotel. It has not actually been paying what? Is it the levies? There are some levies having to be paid, the tourism levy or something like that. So they ended up having to fine them, and therefore they received some money. So fees, fines, and licenses, these are fees for entrance into the game parks or something. When the tourists come, they charge them a fee. Sometimes they can fine them because they are throwing bottles in what? In the game reserves. And of course, in this case, also what? They give some licensing, and therefore they got some money. So 375,000 was actually received. 375,000 was received. Liability for the long-term what? Benefit. So this is not an inflow. So it's basically in this case a liability. Then we have in this case what? Long-term borrowing, finance cost, supplies and consumables used, wages and salaries, other expenses, transfers from other ministries. So they got some money from another ministry, transfers from other ministries, transfers from other ministries. So this was an amount of transfers from other ministries is an amount of 37,500. So it's an amount of, in this case, 37,500, an amount of 37,500. Then transfers to other ministries. This was an outflow. It likely go the other side. Then computer equipment, vehicles. There was in this case what? A revenue from exchange transactions. So revenue from exchange transactions. Revenue from exchange transactions. Maybe in this case it could be they were changing dollars. You know, tourists are visiting them. So they were changing dollars. Then eventually in this case they got a gain on the exchange. So this was amounting to 75 million. So we can continue. Then in this case we have other revenues. We have other revenues that were received. We have other revenues that in this case were received of 450. It's 450. It is 450. 450. So shillings in thousands. 450. Then now, once they have the receipts, because the next one is other revenue, then payables is not reserves, is not part of the inflows. So therefore, in this case, you have what? Total receipts. We can have total receipts. If you add all those ones, they should be able to give you the total receipts. So when you get out the total receipts, you can add 1875 plus 375 plus 375 plus 75 plus 450. What is the total receipts there? You simply add. You get 28,12,500. 28,12,500. 28,12,500. Then you can be able to go to the expenditure. expenditure. Expenditure, you can be able to see how much was the expenditure. We have in this case expenditure. So expenditure now in this case is what they spent. So now we look at the expenses. This is now like in this case what the expenses are. If you move from up there, you have cash, receivables, inventory of consumables, that is an asset. Transfers from exchequer, fees and fines, liability for long-term benefits, long-term borrowing, finance cost. So finance cost was paid. This maybe they had a loan. Finance cost, they had actually borrowed, and therefore they paid some finance cost of 75 million. Then we have supplies and consumables used. So they had some supplies and consumables. Maybe in this case, this was stationery for the staffs. Supplies and consumables are used. Supplies and consumables used in this ministry. It was actually 300,000. Remember, these ones you're having to deduct. These ones you're having to deduct the expenditure. Then also they spent on, in this case, what? Wages and salaries. Wages and salaries, 900,000. Wages and salaries, 900 million. They spent 900 million on wages and salaries. Then we have transfers from other ministries. Transfers to other ministries. They transferred, in this case, what? To other ministries. Transfers to other ministries. But before that, in this case, you have other expenses. Before that, we have other expenses. Before that, we have other expenses of 900,000. The wages and salaries is how much? 750. Wages and salaries, it is 750. Wages and salaries, it is 750. Need to correct that. Wages and salaries, it is 750. Then in this case, other expenses now is what is actually 900,000. They had other expenses that they actually incurred of 900,000. Then we have transfers to other ministries. Transfers to other ministries. Transfers to other ministries is actually 375,000. Transfers to other ministries. Transfers to other ministries. To other ministries. Transfers to other ministries. Transfers to other ministries. The transfers they made to other ministries, it was in this case 375,000. So 375,000 you have to deduct. So we have computer equipment, vehicles, land and buildings, revenue from exchange. So those are not in this case what expenses. So therefore you can be able to get a difference. So the difference in this case should actually be able to give you a surplus, or what you refer to as a deficit. It can give you a surplus, or in this case what? A deficit. So surplus or deficit. So the surplus in this case is like now the profit in the other entities. A deficit is like now in this case what? A loss. So here we don't call it a profit. It's a surplus. So it's not a profit-making organization. The ministry is not a profit-making organization. It's a government entity. It is a government entity. It's not a profit-making organization. So we call it what? A surplus. What they have as extra. Remember this surplus now, it is normally returned to what? The treasury. If you, in this case, at the end of the financial year, you have excess money, then in this case, it has to be taken to the treasury. Then they do the allocation of the budget again. So like that. They do the allocation of the budget again like that. So in this case, if it's a positive, it is a surplus. If it's a negative, it is a deficit. It is a deficit. So you're saying wages and salaries. So we corrected wages and salaries, it is 750,000. We corrected here. We corrected here. So you can now in this case look at the difference. Are you getting a positive or a negative? You need to get the difference, whether it is a positive or a negative. You're getting 412,500. So 412,500 is like it is a positive, and therefore that is what? 412,500, that is what? A surplus. It is a surplus they have. 412,500 because it is a positive, it is a surplus they have. It is a surplus they have. So you can go to the second part, which in this case now requires us to prepare the statement of financial position. Statement of financial position. The statement of financial position. It wants us to prepare the statement of financial position. Statement of financial position. So in this case, we have Ministry of Tourism. Ministry of Tourism. Tourism, statement of financial position, statement of financial position, statement of financial position as at 30th of June 2015, as at 30th of June 2015. So our shillings are in thousands. Our shillings are in thousands, and obviously in this case, we are going to start with what? The assets. We are going to start with the assets. We start with the assets. We start with the assets. We're going to start with the assets. We're gonna start with the assets. We're gonna start with the assets. We're gonna start with the assets, so then non-current assets. Current assets. We're gonna start with the non-current assets. So you look at, in this case, the statement of you've actually been given there. So part of the assets we can be able to see, we can be able to see what we have: computer equipment, we have vehicles, we have land and buildings. So computer equipment, we have computer equipment, we have vehicles, and we have land and buildings. So computer, we have computer equipment. Computer equipment of an amount of 200,000. Computer equipment of an amount of 200,000. Then we have, in this case, what? Vehicles. We have vehicles. We have vehicles of an amount of 175,000. We have vehicles of an amount of 175,000. Then you have land and buildings. Land and buildings. Land and buildings. Today, people are so relaxed. There's no elimination here. There's no eliminating, losing what? Unrealized profit. There's no elimination of unrealized profit here. Things are just smooth. Just pick them the way they are. There's no elimination or doing anything here. Things are just smooth. So it's just having to relax. And you pick the items. So current assets, you can go in this case to the current assets. Things are just so smooth. No issues of elimination. No issues of how we have to leave it, we'll do it later. Things are just smooth here. Things are just very smooth. It's just relaxation. No issues. Current assets. Identify current assets that you have here. So they've been told, in this case, there were some consumables. There were some consumables that, in this case, they had. Of course, you have also cash and cash equivalents. Then you have what? The receivables, right? So you have cash and cash equivalents. Cash and cash equivalents is the second item. Cash and cash equivalents. There's no cash in transit here. So there's no cash in transit here to give us trouble. We start wondering, we need to be added, we need to do what? Things are just smooth. Things are just smooth, relaxation. No issues of elimination, confusion of unrealized profit on closing inventory. It is not here. Things are just smooth. How I wish. This one comes in the exam. How I wish this one comes in the exam. Imagine 16 marks. How I wish this one comes in the exam. So that is what Angela is just having to say. How I wish this one comes in the exam. So in this case, you have what? Receivables. Receivables, things are just smooth. Receivables, you've actually been told it is how much? 150,000. 150,000, like that. 150,000, like that. Then there were some in consumables they already purchased. Inventory of consumables. Inventory of the consumables. Consumables is like, in this case, things they use on a daily basis. It could be, for example, biro pens. It could be things that they use. Like they are basically in the store. They're in the store. So those are inventory consumables. Those are inventory consumables. So we have inventory consumables. Those are inventory consumables. You have 75,000. It is actually 75,000. So like that. 75,000, like that. So there's no any other item. So we can be able to get a total. We can be able to get a total assets. We can go to get the total assets. total assets. Then we go to the other side, accumulated fund. We said in this case, we don't call it capital, accumulated fund, and of course, what the liabilities. Accumulated fund and the liabilities. Accumulated fund and the liabilities. So in this case, we've been given an accumulated fund. What they have already been able to accumulate as a fund, they have in this case accumulated fund that you've actually been given, accumulated fund that you've actually been given. It is 562,500. It's the very first item that you have there. So here we don't call it capital. In public sector entities, we call it an accumulated fund. An accumulated fund that they have 562, 562,500. Then we have the surplus that we've made, that other side. We have a surplus that we had, that other side. It was in this case of 412,500. Then they have some reserves. They have some reserves. They have some reserves. It is an item. There's an item of reserves there. There's an item of reserves. Item of reserves of 1350. Item of reserves of 1350. Items of reserves of 1350. Items of reserves of 1350. Is the very last item. Is the very, very last item. Item of reserves of 1350. Items of reserves of 1350. Items of reserves of 1350. Items of reserves of 1350. 1350. Then you can in this case go to what? Or we can go to, if in this case we have any non-current liabilities, we can be able to indicate whether we have any non-current liabilities. If we have any non-current liability, I can be able to see you've already been able to add. You've already been able to add this one. You're getting 3.6 million. So you're getting 360000. The total assets and liabilities is 360000. So you can in this case check whether we have non-current liabilities. We have liability for long-term benefits. There's an item for liability for long-term benefits. It is there, liability for long-term benefits. Liability for long-term benefits. Long-term benefits. Liability for long-term benefits. There's an item for liability for long-term benefits. Long-term. Liability for long-term benefits. Item for liability for long-term. Liability for long-term benefits. Liability for long-term benefits. It is an amount of 150,000. 150,000. Then also we have in this case what long-term borrowing. Is an item of long-term borrowing. Is an item of long-term borrowing that we have there. Is an item of long-term borrowing. So you just continue with your table. Don't start wrapping your book. Don't start wrapping your booklet the way I'm wrapping the board. You just continue with your table. Or just continue with your table. Don't start wrapping your book. So long-term liability. In this case, you have what? Long-term borrowing. We have long-term borrowing. Long-term borrowing. We have long-term borrowing of an amount of 750,000. 750,000. So we need to confirm whether we have any current liability. Any current. We have trade payables. We have payables down there, not trade, but just payables. So we are not a trading company, so we'll just call them payables. We have current liabilities. We are not a trading company. We are not having to sell and buy, but we are a ministry. So we'll have payables or just what creditors. We won't actually end up having to call them trade. So in this case, the amount of 375,000. 375,000. So you should be able to get a total. Confirm whether in this case it is actually 3.6 million. It should actually be 3.6 million. The same way in this case we have that other side as what 3.6 million. The same way we just have that other side as what 3.6 million. So confirm whether it is 3.6 million. Confirm whether it is 3.6 million. Confirm it is okay. It is the same. So 3.6 million. 3.6 million. 3.6 million. And because that is in this case how we can be able to present the statement of financial performance. So take note, don't get into the exam and you forget. So they'll tell you Roman number one, statement of financial performance. Then you've forgotten is like an income statement, where you compare now receipts and expenditure. You know, that is what happens to the students. So Angela, get into the exam, you've forgotten. So the receipt statement of financial performance, it's supposed to be income. I'm not seeing the word income. Statement of financial performance is like the income. Then now they can call upon you to prepare what a statement of financial position. Now is the balance sheet. Is the balance sheet. So you have to take note of that. You have to take note of that. You have to, in this case, end up having to take note of that. You end up having to take note of that. Then, you know, in this case with the government agencies, they operate with what we call budgets. They operate with what we call budgets. They operate with what we call budgets. So before, in this case, for example, the treasury ends up having to come up with a finance bill. I think you heard about these things because you remember last year, as the Gen Zs, we rejected that Finance Act. As the Gen Zs, we rejected that Finance Act. This 𝗷𝗲𝗱𝘆 Gen Z, we had rejected that Finance Act. So what happens in this case, it is that before the Treasury actually in this case comes up with the annual budget, like the one that was approved recently, the one that in this case was actually approved recently, they actually call upon each and every ministry, for example, to come up with their budget estimates. Their budget estimates. So these ones are actually shared with the Treasury. Then in this case, they budget. They say Ministry of Education, they'll get this. Ministry of, in this case, Interior, they'll get this. They would have already been able to share the estimates. Each and every ministry shares the estimates, what they are actually budgeted for. Then now the Treasury gives them the money. They actually give them the money. They actually do what? Give them the money. So they are having, like in this case, what they had actually budgeted for. What they had actually budgeted for. And of course, the actual amount that they'll end up having to do what? To spend. The actual amount that in this case they'll end up having to do what? To spend. So with this comparison of the budgeted, what they budgeted for example, in this case, maybe they'll end up having to indicate for consumables in our ministry of what? Consumables in our ministry of what? Ministry of Education. The consumables, we're having to anticipate, maybe in this case, we'll be able to spend 400 million. We'll likely be able to spend 400 million. So they are given the money, but in this case, you know, they'll have like a total. But in this case, actually, they might end up having to spend either 600 million or they might spend less. So with this actual, and of course, the budgeted, we'll have what we call variances. Variances. In MA, you'll have two kinds of variances. You'll have two kinds of variances. What are these? Those who are doing MA, I know most of you are not having to do MA, so you're waiting for the next sitting, you do MA. But now if you compare the budgeted and the actual, you get some kind of, like in this case, variances. Variances, you call them what? Is it adverse and what? It is adverse and favorable. So they can actually, it can be adverse or it can be favorable. So if it happens that in this case, what you've actually ended up having to spend is actually more than what you had actually budgeted for, then we call it adverse. It is not in your favor. But in this case, if it happens, what you actually spend, let's say, for example, in this case, you spend maybe 200, then it is favorable because you can see the difference between the two is actually in your favor. Is actually in this case not in your favor. Is in your favor. If you minus the budgeted and the actual, you end up having to get a positive, favorable. So if the difference between the two is actually positive, that is a favorable. If it's negative, it is an adverse because you've spent more than what you had actually anticipated to spend. So each and every ministry in this case, they come up with their budgeted estimates. And of course, in this case, they actually end up having to spend. So the difference between the two in this case actually end up having to give what we call a variance. It will likely end up having to give what we call a variance. And therefore, there will be the budget presentation. Then in this case, what we call budget presentation. So presentation of the budget information in the financial statements. So presentation of the budget information in the financial statements. You can write that heading. Presentation of the budget information in the financial statements. So presentation of the budget information in the financial statements. Presentation of the budget information in the financial statements. Presentation of the budget information in the financial statements. So how do you present these budgets in the financial statements? Apart from the statement of financial performance, statement of financial position, there can be the presentation of the budget information in the financial statements. And therefore, in this case, to be able to help us to do this, you can open December 2013. I think I had already shared it also. December 2013, question number 5. December 2013, question number 5. December 2013, question number 5. So if you are there, let me know. If you are there, you let me know. December 2013, question number 5. December 2013, question number 5. You can see you're saying yes, yes, yes. You've already been able to get it. You've actually already been able to get it. You've actually already been able to get it. You've actually already been able to get it. So you are in this case told that the following information was obtained from the Ministry of Finance for the fiscal year ended 30th of June 2012. So you have receipts and of course you have what payments. So for the receipts, they had budgeted for 600, but they got that. We have borrowings, we have grant, we have then the other government agencies, what they received from other government agencies. We have the payments like education, we have defense, we have apart from defense, we have government transition planning costs, we have health, we have housing, we have internal security, and others. Then in this case, you are called upon, required to prepare a budget outcome for the Ministry of Finance for the year ended 30th of June 2012 in accordance with the requirements of International Public Sector Accounting number 24. Presentation of budget information in financial statements. This is according to what 𝗵𝗄𝗃 number 24. Is according to 𝗵𝗄𝗃 number 24. Is according to 𝗵𝗄𝗃 number 24. And therefore you can be able to use that question to know how in this case you can be able to present that budget information. So exactly in this case what December is December 2013, question 5. December 2013, question 5. December 2013, question 5. December 2013, question 5. So the budget outcome, what it means in this case, you'll be able to get what were the variations, what were the variations or the variances that actually arose. What were the variations or variances that in this case ended up having to Ministry of Finance, budget outcome. So you have all us on the paper what the Ministry of Finance, the budget outcome for the year ended, budget outcome for the year ended, 30th of June 2012, 30th of June 2012. So in this case, we'll have like in this case what 3 columns. You'll have in this case the budget, what was budgeted for, then you'll also in this case have the actual, then you'll have the variance. you'll have the variance. You'll have the variance. So in this case, remember, you have to indicate that you are dealing with shillings in millions. We are dealing with shillings in millions. We are not having to deal with cows that are going to be compulsorily vaccinated by this government. We are dealing with shillings of millions. We're not dealing with cows that are going to be compulsorily vaccinated by this government. But now it is money. We are dealing with money. We are serious people. We are serious people. We are dealing with, in this case, what? Shillings in millions. Shillings in millions. Shillings in millions. We are dealing in this case with what? Shillings in millions. Shillings in millions. So this is the first item there is under what? The receipts. It is under receipts. What they received it is under receipts. And therefore the first item there is revenue from taxes. Revenue from taxes. Revenue from taxes. Revenue from the taxes. So the revenue from taxes, in this case, they had budgeted in this case to receive 600,000, but in this case, they ended up having to receive 552,000. 552,000. Do you think this one will likely be favorable or adverse? Do you think this one is actually in their favor or it is against them? Do you think this one is actually in their favor, or in this case, it is against them? What do you think? What do you think? It is, I can see Michelle says adverse. Do you think it is in their favor, or in this case, it is against them? It is against them because now they won't be able to have enough resources. So these are receipts. They were expecting 𝗂𝗃 will give them 600,000, but they have given them this. It means they need to look for this 48 somewhere else. They need to look for this 48 somewhere else. I don't know where they go to. Will they go to China, or where will they go to? We are just wondering. We are just wondering. Will they go for the Eurobond, or what is going to happen? Or what is going to happen? If they don't get it, things might just go arambas for them as a ministry. So this will likely be negative. It is adverse. It is not in their favor. It is not in their favor because they actually received, in this case, what less. We go to the next item, borrowings. Borrowings. No, they'll also have to borrow because now they have this one. They'll be having some anticipation. Borrowings nationally. Maybe in this case, it could be through what? The government bonds. So in this case, they're expecting, they are supposed to receive, in this case, 400,000. But in this case, Kenyans seems the economy is not doing so well. They are not getting into matters bonds. And therefore, they get a negative there of 20. They get less amount from, in this case, what? The Kenyans, or in this case, of an amount of 20 million, 20,000 million, 20 billion, 20B, negative. It won't be in their favor. They were anticipating they get 400, but they have gotten less. So it will be negative. And in this case, you have what? Foreign borrowing. This is now China. This is now China going to China, or the Eurobond. From the Eurobond, they're expecting 160. 160, but now in this case, the Euro guys convince them. So if you want to, at least in this case, eat some more money in corruption, then you can get more. Get more so that you can be able to eat. So they give them, in fact, double. They give them double, then when the money reaches Kenya, some of it disappears, others eat like that. So they eat, in this case, and satisfy themselves. So this one is now in their favor. So they actually convinced the Eurobond guys. In this case, give us 160, but the Eurobond guys convinced them. Take even double, knowing that in this case, they'll be what? Foreign exchange fluctuations. Foreign exchange fluctuations. So that in this case, the dollar ends up having to go high, the Eurobond goes high. So we suffer more. They want us to suffer. They want us, in this case, to do what? To suffer. So this one is in their favor, because now in this case, they have gotten more amount of 160. It is in their favor. It is positive. So it's not negative. So they were anticipating to get 160, but now they have received 320. They have received in excess of what they were expecting to receive as a receipt, and therefore it is in their favor. So that is what will happen. The grants from IMF, grants from IMF, grants. We have grants. In this case, these ones are from IMF and the World Bank. Grants from the IMF and the World Bank. They were expecting to receive 80, but now World Bank has, in this case, given them more because they know they'll just pay. So in this case, it is a positive of 20. It is a positive of 20. It is a positive of 20. It is a positive. It is a positive of 20 like that. A positive of 20 like that. Then the last item from other government agencies. So from other government agencies, so we still have the same tables. We have budgeted what I've been able to budget for. We have what we've been able to budget for. We have in this case the actual, and we have in this case what? The variance. The variance in our shillings are in millions. Shillings are in millions. Or shillings are in millions. Shillings are in millions. Shillings are in millions. So in this case, you have what? Other agencies. We have the other agencies. They were expecting they'll receive 60,000. But now they will receive 64 billion. They will receive 64 billion. They'll end up having to get a positive of 4 billion. They'll get a positive of 4 billion. 4 billion there. So in this case, we'll have in this case what? The total. We can be able to have the total there. The total. You can get the total and get the total there. You can get the total. Then in this case, you can go to expenditure. So the expenditure side. You can go to the expenditure side. On the expenditure side, they will spend on education, the Ministry of Education. The Ministry of Education. So they're expecting in this case, they'll end up having to spend 600,000. But they end up having to spend 536,000. So is this one in their favor or it is adverse? Is this one in their favor or it is adverse? So Ministry of Education 600, but they spend 536. Is this one in their favor or it is adverse? It is in their favor because in this case, they were anticipating they likely end up having to do what? Spend 600, but they have spent less. So they are saving something there. So it's the opposite of this other side. So this one, they were expecting they'll spend 600, but they have spent 536 only. So it's in their favor by 64. It is actually in their favor by 64 billion. 64 billion. Is it 64? Yes, 64 billion. Then you have what? The Ministry of Defense. Ministry of Defense. Ministry of Defense. So in this case, they were expecting they'll spend 120, but they have ended up having to, the actual expenditure was 80. So it is in their favor by 40. 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 Then you go to the other ministry. The other ministry there. The other ministry there is Government Transition Planning Cost. Transition cost. Government transition costs. So this government transition cost from the Jubilee government, in this case to what? To 𝗵𝗏 government. To 𝗵𝗏 government, they've spent some money there because the other issues they have done there. They have introduced the Prime Cabinet Secretary. So there's an extra budget that in this case they have to incur. They also have to prepare what? Kasarani for the swearing in. So they will spend a lot of money to transit from the old government to the new government. So they are ending up having to do it to spend more. They were anticipating they'll spend 10, but Kenyans who are Kenyans, they'll spend more. They'll spend more just to celebrate what? The swearing in. So by what? 5 billion. So this one is not in their favor. It is not in their favor. They were expecting to spend 10 on transition, but they have spent more. They have spent more. They have spent no more because people want to celebrate. People want to really celebrate more. There's a new government in place. So that transition cost ends up having to be so much more. Then the health ministry, 201,000. But now what they actually spent was actually 120. This one was actually in their favor by 81. It was in their favor by 81, so it is a positive. It was in their favor. They ended up having to spend less, and therefore they saved. They saved from what in this case they had actually budgeted. We have internal security. Internal security. We have internal security. So for internal security, they were expecting in this case to spend 240, but they have ended up having to spend 300. So the police have incurred a lot of expenditure, buying tear gas for the demonstrations and having in this case to do what? Provide the water. that water. I don't know, it looks like yellow or green, that water. So they have incurred more. They have incurred more. They never anticipated that the Gen Zs will do that thing. The Gen Zs will do that thing. So they did it, and now they had to spend more on tear gas and all those things. So it was not in their favor. By in this case, what? -60. So this one is not in their favor because they have ended up having to spend more. They were expecting they spend 240, but they have spent more. So they are it's not actually in their favor. It is negative there. Then you have what? Others. So others, we even don't know these others what they are. Maybe they could be miscellaneous. They could be miscellaneous expenditures. They're expecting they'll spend 160, but now they have ended up having to spend 240. Just imagine 240 on miscellaneous. So in this case, it is what? -80. It is -80. This one is actually -80. And therefore, you can be able to also get the total for here. Get the total for the expenditure side. Get the total for the expenditure side. What is the total you got here? What is the total you got in the first one there? What is the total you got in the first one there? There's something you've forgotten. Housing. You've forgotten housing. Oh, you've forgotten housing. We've forgotten housing. Housing. You've just forgotten housing. Affordable housing. They had told us in this case, we can put it somewhere. Squeeze it somewhere. So maybe I can be able to put it here, housing. Squeeze it somewhere, housing. So for housing, they told us in this case that they have actually budgeted in this case how much? 180. 180. They have budgeted for 180, but they ended up having to realize this money for housing is not a lot, and therefore they brought in a housing levy. They had to bring in housing levy in the second year. They had to bring in housing levy because they realized they are spending more. So in this case, this one is what? -40. It is -40 like that. It is -40. It is -40 for housing. So 180 was their budget, but they are spending more to build what? The affordable housing. So it is -40. -40. So for the first one, in this case, I can be able to see you're saying you're getting 116B from this other side of the seats is 116B, 116 billion. While this other side, you're getting how much? While this other side, you're getting 0. You're getting 0. It should be 0. Should be 0. Should be 0. Should be 0. You're getting 0. This other side, you're getting 0. You're getting 0. And that in this case, the total in this case, or you can be able to say, now you'll be able to say what you'll be able to, you need to now add the two, this one and this one. You need to add the two, and in this case, you'll be able to get a figure we refer to as the net cash flows that they would have in this case been able to set the net cash flows. You'll have in this case a figure we refer to as the net cash flows. You'll have a figure we refer to as the net cash flows. You'll have a figure we refer to as the net cash flows. So you get you add this and this, then you have the three columns continuing there. So you'll call it what? The net cash flows. So now is the difference between the two. Is not the difference, but basically this is the total of the two. If it was a figure you would have added, it is having to come to 116 billion. 116 billion like that. 116 billion like that. 116 billion. No, 116 billion. 116 billion. 116 billion. So like that. 116 billion like that. So you can look at the very final question in May 2014, question number 5. May 2014, question number 5. So May 2014, question number 5. So May 2014, question number 5. So May 2014 question number 5C. It is May 2014 question number 5C. May 2014 question number 5C. May 2014 question number 5C. So look at that one, May 2014 question number 5C. So it says it says the following summary of receipts and payments was extracted from the records of Ministry of Finance for the fiscal year ended 30th of June 2013. So you've actually in this case been given the actual amounts, then you've been given the original budget, then of course now in this case what the final budget. So in this case you have receipts, when you have payments, then you are told the statement of comparison of budget and actual amounts for the fiscal year ended 30th of June 2013 in accordance with the International Public Sector Standard number 24, presentation of budget information in the financial statements. Then in this case, you are given there how many marks? 8 marks. So in this case, you've been given there two figures of budget. There are two figures of budget. You have the original budget and you have the very final budget. 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 So in this case, if you are given the two, the original budget and the final budget, you use the figures for the final budget. Use the figures for the final budget. Use the figures for the final budget. That is what they finally budgeted for. That's what in this case they finally budgeted. So remember, the budget goes through a process. So there are in this case, initial estimates. Then in this case, there'll be now the very final budget. Like in this case, what the very final budget. So the final budget figures are the ones you use. So take note. If you're given the two figures, original budget and final budget, use the final budget to get what the variance is, to get the variances. And then in this case, we can be able to prepare. So it is what the Ministry of Finance, still the Ministry of Finance. So Ministry of Finance, Ministry of Finance, the Ministry of Finance. So statement of comparison of part of the budget, statement of comparison of the budget, statement of comparison of the budget and the actual statement of comparison of the budget and actual statement of comparison of the budget and the actual statement of comparison of the budget and the actual for the year ended for the year ended 30th of June 2013. 30th of June 2013 for the year ended 30th of June 2013. So in this case, we have receipts. We have receipts for now. So we are having to compare in this case, what the final budget and of course in this case what the actual. So we are having to compare the final budget and of course in this case what the actual. So in this case you have the final budget. You have the final budget. And in this case, we have in this case what the actual. Sure. Then in this case we have the variance. We have the variance. So the shillings are actually in billions. Shillings are in billions. Shillings in billions. Shillings in billions. So shillings are in billions. We have in this case the receipts. The receipts. We have the receipts. We have the receipts. We have the receipts. So for the first item there, we have what taxation. So from taxes, taxation. They budgeted in this case, they received 1120, but they ended up having to receive in this case 800. So they were short. They were short in this case by 320 billion. So 320 billion. It is not in their favor. It is not in their favor at all. So they were expecting to get more from taxes, but they have received less. So it is not in their favor at all. It is not actually what in their favor at all. It is not in their favor at all. It is not in their favor at all by 320. Then the borrowings, you have the borrowings. Borrowings, you have in this case the borrowings. They were expecting this case from borrowings. They'll get 480. They budget to receive 480, but they received 400. So it was not in their favor at all by 80. Then you have trading activities. They can do some businesses here and there. Trading activities. From trading activities, they were expecting they had budgeted to receive 840, but they only received in this case what? 840. It was not in their favor by negative 48. From international agencies. Aid, they were expecting to get some aid or support from foreigners or foreign agencies. So in this case, they budgeted for 360, but these foreigners gave them more, 400. So it was in their favor by 40. It was in their favor by 40. It was more in their favor by 40. Disposal of assets. They were expecting to dispose of some assets. Disposal of assets. They were expecting to dispose of some assets. Disposal of assets. So from this disposal of assets, they were expecting 760. 760, but they received 800. It was in their favor by 40. It was in their favor by 40. It was in their favor by 40. Then the last item, it was the other receipts. Other receipts. The other item is other receipts. Other receipts. So confirm in this case whether you've actually been able to write this. I want to wrap. Confirm whether you are through. So I want to wrap and continue with the figures. I want to wrap and continue with the figures. Not yet. I'm still saying not yet. Yes, are you through? So I think you are through. You are through? Are you through? Are you through, Amos? Are you through, Amos? Amos, are you through? Can you see Michelle there says yes? Michelle says yes. Mercy says yes. Kathy says, wait. We are multitasking. Wait, we are multitasking. Just wait a bit. We are multitasking. Statement of comparison of the budget and actual. Statement of comparison of the budget and actual. Statement of comparison of the budget and actual. Comparison, statement of comparison. Statement of comparison of the budget and actual. When you continue with your table, so you don't rub the way I'm rubbing mine here. Don't start rubbing your book. Don't start rubbing your book. Me, I'm rubbing because I cannot continue writing because you won't be able to see. That's why I'm rubbing. So don't rub your book. Don't rub your book. So you can get the last item there. In this case is what? Other receipts. other receipts. For the other receipts, they actually in this case budgeted to get 280, but they actually in this case got how much? 200. So there was a deficit of in this case 80. There was a deficit of 80. So we can be able to get the totals there, and get the totals there. And get the total. Then in this case, we can go to the payments side. We can go to the payment side. We have the Ministry of Defense. They were to pay, in this case, to the Ministry of Defense. They had actually budgeted to pay 720, but they ended up having to pay, in this case, 800. So they paid more. So that was not in their favor at all because they spent more. Education, it was squaring out. Education, it was squaring out as 0. Education, it was squaring out as 0. Then we have health. Health was also squaring out as 0. Health budgeted 400. They spent 400, so there was no variance, 0. Health was also squaring out. Then housing. So housing, they actually saved some because they had actually budgeted for 360, but they ended up having to spend 320. So in housing, they actually in this case did what? Saved 40 billion. Then others, we have in this case what? Others. We have others. We have the others. Others. So what are you getting here as the total? And we're going to get the total here before we finish up with the others. There's a total figure you're getting here on the side of the receipts. There's a total figure. You're getting negative 440. Negative 440. Negative 440. Like that. So negative 440. Then we have in this case on the side of payments. There are other payments they made. We have other payments. We have other payments. We have other payments that they made. So other payments, we have in this case other payments. So for other payments, then in this case budgeted to pay 760, but they ended up having to pay 800. They paid 800, and therefore it was negative 40. So on the side of payments, also there's a total figure you're supposed to get. What is the total figure you're getting on the side of payments? The total figure you're getting on the side of payments. Is it a positive or negative? It is negative 80. It's supposed to be negative 80. Negative 80. It's supposed to be negative 80. And that in this case, it means with this, then we can be able to have in this case our net what? Cash flows. Our net cash flows. Our net cash flows. So this is the total here. Total here is negative 80. Then also we have the total up there, negative 440. So the negative cash flows, then it means you'll have to add the two figures. You'll have to add what? The two figures. You'll have to add the two figures. You should be able to get negative 520. Negative 520. Negative 520. So in short, what you are taking here is negative 440 plus negative 8. So you'll get negative 520 as the net cash flows that were there for the Ministry of Finance. They were in deficit. They were in deficit in comparison to what actually they receive and spend. There was a deficit of, in this case, 520. So it means they need to look for this money, how they'll be able to get it. They need to look for this money as to how they'll be able to get it. They need to look for this money as to how they will be able to get it. And therefore, that's why in this case, you present the budget outcome, for the agencies or a public sector entity like that, as per IPSAS number 24. So that's it. So if this one comes, then that is one of the easiest questions that in this case can be in the exam, so long as you've just been able to master how to come up with those statements how to come up with those statements by comparing the actual with what has actually been budgeted for, what has actually been budgeted for. That's the end of it. That's the end of it. So there are remaining areas that in this case are on theory. So I'll be able to share the notes. I was to share today, but I had a lot of issues. I had a lot of issues that I was having to try to sort. But I think maybe by tomorrow I should be able to share the theoretical part of the remaining areas under the topic of public sector accounting, public sector accounting. So let's see what happens. Maybe if I'll be able to share by tomorrow during the day, then I think that is what we'll be able to go through tomorrow. Then I think we should be able to close on the topic of public sector accounting. We should be able to close on the topic of public sector accounting. So I don't know if there's any question. So let me end there for now. At least the class has just been relaxation. So no issues here and there for goodwill, no issues about, in this case, what retained earnings, no issues of, in this case, what NCI, no issues about investment in associate, no issues about investment in the joint venture, just relaxation, no issues about what unrealized profits on closing inventory, no issues about intercompany sales, no issues about what else? Intercompany sale of fixed assets, and calculation of what unrealized profit on sale of fixed assets. So no such kind of what issues here. Things are just nice. So if this one comes up, then yeah, just be smiling. We'll just be smiling. So I think we can end there. So let's meet tomorrow. See you tomorrow. So at least today we have finished the class early. So you can just, in this case, relax as you wait for the next class. Hope you have, you don't have a next class. You have FM or which one? So that one you might be having at 8 p.m. So screenshot. So you want to screenshot or something? Will you have the lunch hour tomorrow? So I'm not quite certain whether we'll be able to have it. Because tomorrow I'm supposed to have a meeting. So sometimes some of these meetings, people reschedule. So they'll tell you, no, we won't have it right now. Maybe we'll have it at 3, but I have a meeting scheduled for tomorrow during that lunch hour. But if it happens to be postponed, then we shall be in for it. But I'll be able to communicate by around 12 or 11 there. I would have already communicated. So that's it. So see you tomorrow. Have a good night.